Good morning in the US, good afternoon Europe, and good evening Asia. Welcome to today's BPS Index webcast, which will present a review and analysis of BPS contract activity in Q4 2015 and look ahead to 2016. This includes the latest analyses of major BPS contract trends by service type, vendor, industry, and geography. And you'll also notice a slight change in nomenclature from BPO to BPS, which is Business Process Services. Today's webcast will be presented by John Wilmot, NelsonHall's CEO. The main presentation will be about 45 minutes, maybe 45 minutes, and if we receive questions during the presentation, this will be followed by a brief Q&A session. You can enter your questions at any time using the Q&A panel on your screen. And if you're tweeting about the webcast, please use hashtags NelsonHall and BPO Index. NelsonHall is the leading BPO, or BPS should I say, analyst firm committed to the delivery of insight and thought leadership in BPS worldwide. We help service buyers optimize their sourcing strategies and suppliers to optimize their go-to-market strategy and increase bid success. And we offer a comprehensive portfolio of vertical and horizontal BPS subscription services, delivering the most detailed analysis and insight into emerging BPS opportunities and critical success factors. Let me just say a word about the index itself. The quarterly BPS Index is the essential contract monitor for service buyers and vendors alike. It's based largely on contract data gathered in the previous quarter, and the more contract data we can gather, the more accurate the index will be, and the more faithfully we can represent vendors in our TCV ranking tables within the index. So just an appeal to the BPS vendors who've joined us today, and we know there are many who are joining us. Do get in touch to share your data with us. The more we have, the better the quality of the analysis will be, and the better we'll be able to present you in the index calls. To get involved, please contact myself, Paul Connolly, or John. The details will be at the end of the slide deck. And so I'll now hand over to John for the main presentation. John?
Many thanks, Paul. Good morning, afternoon, evening, ladies and gentlemen. Welcome to the January 2016 BPS Index webcast. And Happy New Year and a prosperous New Year to everyone on the call. So the purpose of this call is to look at the final result in terms of the Business Process Services activity in 2015. As usual in this webcast, we're covering comparisons of BPS and ITO contract activity by geography, analysis of BPS contract activity by sector and process, some recent developments in contract activity, and the BPS contract activity market shares of the leading vendors. I know I always make this point, and many of you have been on this call many times, but the one point on methodology is just to remind everyone that the figures shown here are outsourcing contract TCV, so the total lifetime contract value of awards made in a particular quarter. Key point is this is contract data, not revenue data. In fact, as Paul's pointed out, because it's contract data, it is a sample of contract data. It's impossible to be exhaustive of contract data. So this is a sampling process. It's not, you can do the revenue analysis and you know what's there. You have the published financials for that. So just a plug for what we're doing on the revenue side. If you're looking for annual revenues for either individual vendors or for particular markets, then you should use our self-service market forecast tool, which covers 78 BPS service lines, 30 geographies, and 33 industry sectors. This gives highly accurate and granular views of the market, while the BPS Index is giving a snapshot of deal momentum. And although it's somewhat early to be doing the full year revenue analysis for the vendors, you can't do that with great accuracy until all the financial reporting's taken place over the last couple of months. We've already had quite a few requests for estimates of BPS revenues for individual vendors, through the end of 2015. Those sort of estimates are already going on, and we've done a fair bit of that at the start of this year. So let's start with a view of BPS and ITO contract activity overall to see how levels of contract activity changed globally and by geography in 2015, and how BPS contract activity is progressing relative to ITO contract activity. this chart compares outsourcing contract activity over the past 12 months. That is the whole of 2015. It's nice and clean at the moment. I always like it when the last 12 months actually corresponds with a full calendar year. It's much less confusing that way. 2015 in the right-hand column, 2014 in the left-hand column. The figures in green are IT outsourcing. The figures in yellow are business process services. And the figures in blue are where it's a combination of ITO and BPS. Now, that combination, as I said before, means more than just a bit of technology supporting the BPS deal. We expect that to be in there. This is where there's a wider IT outsourcing arrangement alongside a BPS contract. Overall, the announced outsourcing TCV took a bit of a dive in Q4 2015, and this had a significant impact on 2015 as a whole. At the end of, those of you who attended the last call, at the end of September 2015, overall outsourcing TCV was up 5% over the previous 12 months, with BPS contract activity up by a massive 26%. However, such was the impact of Q4 2015 that for 2015 as a whole, at the end of the year, announced outsourcing TCV was now down 20%, with BPS TCV down 6%. And looking at those proportions as a whole, for 2015 as a whole, BPS contract TCV accounted for 32% of outsourcing TCV over the whole of 2015. That's pretty much in line with, though, falling just below the average of 34% for the previous 5 years. Now, I've already referred to not very good figures for Q4 2015. Let's look at the outsourcing TC figures quarter by quarter, and in particular those for the last quarter. So this chart shows the breakdowns for BPS and ITO TCV by quarter over the past 18 months. So as you can see, it's always nice if there's a nice clean trend in this. Unfortunately, overall, the changes in BPS TCV have been yo-yoing by quarter, alternately going up and down. So BPS TCV increased year on year in Q1 2015. First quarter of last year, it's up 12%. Third quarter of the year, it was up 108%. But then, on the other side of the coin, it decreased year on year in Q2 2015, down 11% year on year. And in Q4 2015, it was down a massive 74% year on year. Indeed, Q4 2015 was the lowest quarterly level of announced BPS TCV that we've ever recorded. And that goes back to Q1 2002, when we first started making sure we systematically collected this data and doing these calls. However, that decline is the global perspective, and the picture does differ quite significantly by region. So if we go on to the next chart, so let's have a look at the performance of BPS TCV by geography. This slide is broken down into the usual three elements. The table at the top shows a total outsourcing TCV for 2014 and 2015, broken down between North America, Europe, the mature economies of Asia Pacific, namely Australia, New Zealand, and Japan, and the rest of the world, covering the remainder of Asia Pacific, Latin America, and the Middle East. The table bottom left then shows the IT outsourcing TCV, and the table bottom right shows the business process services TCV. So I'm going to ignore two of those tables. So let's just look at the BPS TCV table bottom right. Then we can see there's actually a marked difference in growth in BPS TCV in 2015 between North America and elsewhere. So BPS TCV in North America in 2015 was up 28% year on year, while BPS TCV was down 24% in Europe, with an awful lot of that downturn, clearly coming from the UK. Having said that, so that's the annual picture. Having said that, BPS TCV in both Europe and North America did take a dip in the last quarter in Q4 2015. I know last quarter we were looking at, we were expecting the BPS TCV to be up about 10% overall for the whole of 2015. For that to actually come in at -6 is quite a significant change. And so Q4 wasn't brilliant in any of those geographies. So let's put the figures into a wider historical perspective, if you like, and look at the patterns of BPS TCV in North America and Europe over the past 10 years. So taking this historical perspective, then the level of BPS TCV better than average for North America over the past 4 years. I mean, none of these figures in the last few years compare with the, if you like, the early years of new contract activity a decade ago. But looking at those patterns, then 2015 for North America is better than 2014, it's better than 2012, marginally below that in 2013. While level of BPS TCV in Europe has actually been on a decline for the last few years. So the decline in terms of the reported TCV for BPS in Europe, it started going down in 2012 and it's carried on going down each year since in 13, 14 and 15. Now part of this clearly can be a reporting pattern in terms of more renewals coming through and less visible. It's also, I think it's noticeable in Q4 the lack of really big deal activity. I mean, the numbers of deals was down as well, but these figures tend to be highly dependent or highly influenced by the really big deals, and there was a lot less of that coming through in Q4 than there has been previously. So that's covered BPS contract activity overall and by geography. Let's now take a look at BPS TCV by industry sector and process. So I've probably been saying this for 10 years as well, but overall BPS TCV continued to be dominated by government and financial services sectors, with these two sectors accounting for 64% of BPS TCV globally in 2015. The major changes in behaviour in these sectors in 2015 was the increase in BPS TCV in the government sector in North America last year, and that was accompanied by relatively unchanged levels of BPS TCV in financial services. While you can see for Europe that whilst the government figures have held up reasonably well, the level of financial services BPS TCV activity dipped considerably in Europe last year. There's one figure there, the next one down, which is much more encouraging in both North America and Europe. So the major positive change in both North America and Europe was in the increase in BPS TCV in the healthcare sector. While there was an increase in BPS TCV in the commercial payer space in North America, the major driver of this increased BPS TCV in the healthcare sector in both North America and Europe was actually in the healthcare provider sector. Now this was a really dramatic change in Europe, specifically the UK, and we covered some of this a couple of quarters ago, and we'll go on to look at it a little bit more again later on in this session. But some significant changes going on in healthcare provider in both the US and in the UK. In addition to healthcare, there was an increase in BPS TCV in the telecoms and media sector in both North America and in Europe in 2015. Having said that, what was probably slightly more disappointing is, I guess, the manufacturing sector, which has tended to be the heartland of much of the F&A BPS type activity. So levels of BPS TCV declined in both the manufacturing and the retail sectors in 2015 across both North America and Europe. So these two sectors last year accounted for just 11% of BPS TCV compared to just over 16% of BPS TCV in 2014. So, the manufacturing has always tended to be up there, probably in third or fourth, but significantly chipping in globally. It was noticeably down last year. So if we move on to looking at the patterns for the commercial sector and the government sector, again, taking a fairly historical perspective on it, to take a look at what's going on there. Then the large learning BPS contract in the defence sector that we saw in Q3 2015 took BPS TCV in the government sector beyond its value for 2014 overall. And for 2015 as a whole, the government sector increased its share of BPS TCV from 34% in 2014 to 41% in 2015. Having said that, the government sector's share of BPS TCV was largely unchanged in Europe, but increased significantly in North America. So in North America, government share of BPS TCV went from 26% in 2014 to 46% in 2015. So overall, BPS TCV in the government sector grew by 13% globally in 2015, while BPS TCV in the commercial sector actually declined. It declined overall by 17% globally in 2015. Now, this decline, as you might expect from the earlier commentary, was much more marked in Europe, which was down 27% across the commercial sectors, compared to North America, which was down 9% year on year across the commercial sectors. So let's switch to a view of BPS TCV by process group. And here the pattern of BPS TCV was, again, it was fundamentally different in 2015 compared to 2014, or dare I say the norm. So in 2015, the levels of uptake in back office BPS and front office BPS both increased significantly, while the level of industry-specific BPS fell to a very low level. That is a very low level historically, with the industry-specific BPS accounting for only a third of BPS TCV in 2015. Now, clearly a lot of that is coming out of decline resulting from the financial services sector, which is typically been financial services and government that yield a large part of that. So those sectors are driving that decline. As we saw in the last call, the customer management services space was no longer dominated in terms of new contract activity by the telecoms and media sector. It was pushed into second place by the financial services sector, and that stayed the case for 2015. So top four sectors for CMS TCV in North America in 2015 were financial services first, then telecoms and media, then healthcare and manufacturing. There was a slightly more traditional pattern in Europe, where the top sectors for CMS TCV were retail and telecoms and media, followed by financial services. But looked at globally, combining all of those, then actually, the financial services sector was coming through most strongly in terms of CMS TCV last year. Turning to the more detailed breakdown of BPS TCV by service line, and looking, when we've covered the front office, we've seen what was happening at the top level on industry-specific BPS TCV. So let's look at the back office area. And the back office service lines that grew in terms of BPS TCV in 2015 were HR outsourcing and multi-process back office. Now, within multi-process back office, and this one's been building for a while, the bulk of the contribution was from the healthcare sector, though there are also meaningful contributions elsewhere, particularly from the transportation and the manufacturing sectors. And what's generally happening here is the multi-process back office deals are typically including finance and accounting BPS, but then moving beyond just finance and accounting BPS to add in either HR BPS or procurement BPS services as well. I want to switch now just for the one slide, because I think having put those figures up there, it might be useful to put in some indications of revenue growth alongside the contract activity. So one of the things that Nelson Hall does every quarter, we're publishing what we call a ones to watch report, which is looking at the revenue growth and the EBIT margin for about 100 vendors. And we typically group them into these main groups. It's not a market view in terms of a clean cut by service line. It's really sort of heritage groups, but it gives you an indication of the types of growth that are coming through from those. And this one isn't an average figure for those. I haven't averaged those. The figures shown here are the median figures. So they give an indication of the level of revenue growth achieved by the middle ranking vendor in each of these groups. So, I mean, one of the issues with doing averages is clearly it tends to get dominated by the larger vendors. If you take the median, it's probably more typical of what an individual vendor is would expect to get. And within the report, we do publish the sort of top quartile and bottom quartile, and clearly those figures are wildly different from these. But taking these median figures for the different vendor groups as an indication of market growth, we can see the median revenue growth for the first 3 quarters of last year for the pure play BPS vendors, which are a pretty good indication of the BPS market growth, was around 8%. For the HR outsourcing vendors, and this is the pure play HR outsourcing vendors, rather than the big US or European multi-service vendors who include HR outsourcing within it. So for those pure play HR outsourcing vendors, the median revenue growth for the first 3 quarters of last year was around 6%, and it was around 3% for the customer management services vendors. Now, clearly there are CMS vendors who are considerably exceeding that, but again, this is the, pick the guy in the middle, and the numbers they were on was around 3% revenue growth. So that's just it to give you an indication of some absolute revenue growth numbers in these areas. Okay, so what were some of the recent developments in the BPS market in the last quarter of 2015. And before going on to Q4 2015, I was going to recap on what we were seeing in Q2 2015 and to a certain extent in Q3 2015 when we looked at the impact of RPA and so on the market. And actually, a lot of these trends were being repeated to a certain extent in Q4 as well as in Q2. So in Q2, we saw really where a lot of those big numbers you saw on the healthcare provider side in Europe were coming from, which was Capita in the UK, supporting NHS England and starting to support some of the other entities. We're also starting to see quite a lot of revenue cycle management activity in the US. I know RCM is a pretty mature market, but there seems to have been a burst in reshuffling of activity around that space recently. And then clearly the F&A, besides moving out into HR and procurement, is moving out into supply chain management, and there's quite a significant supply chain management industry building around. And we were looking there at Avato and Capgemini contracts. So if I move on to Q4, what we see in the last quarter, I mean, I guess one of the big topics in the news at the moment is who's going to buy Perot Systems. And okay, Perot has done a separate deal in terms of much of its RCM activity. They've maintained some of that itself, but we can see here, Accretive Health awarded a 10-year revenue cycle management contract by Ascension. Now, okay, you could say that's normal, isn't it? Yes, it is, except it's a pretty big contract. What's new, and it's part of all this jostling and restructuring and repositioning going on the healthcare provider side, is that Ascension and Towerbrook are actually investing $200 million in Accretive Health as part of that. We're also seeing people starting to acquire some of the Medicaid side on the healthcare payer side, on the government healthcare. So Molina's starting to mop up some of the smaller Medicaid assets that are around, and you can see 3 examples there, and they themselves are being acquired. So there's currently quite a significant amount of investment going into the various aspects of healthcare in the US, and a certain amount of restructuring of the industry going on. I think, as we saw earlier in the UK, there's similar sorts of things going on, certainly in terms of the commissioning groups in the UK, and jumping down to the bottom on that. NHS SBS has been doing a lot of accounting work there for a long time. What happened in Q4 was they were starting to actually launch quite a few new marketplaces. So lots of care marketplaces targeting the clinical commissioning groups coming through, also a facility management procurement network, a framework for acquiring IT in support of procuring pharmaceuticals. So there's quite a lot of procurement-related and back-office management type activity going on in the UK, in healthcare, and similarly in the US. So that structure of that industry is changing a fair bit. And on the point in the middle, I mean, we looked at what the recent North American healthcare BPS contracts were. There's still a lot on the customer management services, a lot on revenue cycle management, similar theme to the UK, lots on supply chain purchasing groups. Sorry, this is all healthcare provider, these bits, rather than healthcare payer. As it all is, apart from that third point down. So, you know, quite a lot going on in the healthcare provider space. The theme we looked at in the last quarter, really the automation of F&A BPS, particularly around RPA. And just to put 3 examples in there that happened in the last quarter. Okay, Capgemini has been working with UiPath for a long time. They formalised that partnership. You know, so that's a sort of standard RPA type arrangement. Genpact is now you know, looking at actually taking some of that further, so beyond some of the P2P and O2C type activity, and looking to see whether it can automate some things like credit reporting and financial planning and analysis. You know, that automation and RPA is moving beyond the you know, simpler repetitive tasks within F&A into the more complicated stuff. We've seen R2R activity or partnerships, well, R2R becoming much more significant over the last year or so. Anyway, a lot of people are now, certainly people like EXL have been active with Blackline for a while. Genpact now become a Blackline Platinum partner. So the whole use of both RPA type tools and third-party platforms continuing to move around the F&A space. A similar sort of vein, we've clearly seen Workday becoming an important factor in the HR outsourcing space over the last year or so. I think it's fairly significant that they've expanded the partnership with ADP to offer global payroll to multinationals. So that's quite a big move on their part. And then just to keep the supply chain management theme going, okay, it's not quite the same as the deals we saw in Q2, but clearly people like Icor, you know, looking to move into the aftermarket areas in India and provide support facilities in China. So that supply chain management continuing to advance into Asia. Okay, so let's take a look at what the market shares were in terms of announced BPS TCV for 2015 as a whole. I'm not going to talk about these in great detail. You know, the patterns of where the activity is coming from is pretty similar, you know, to what it was last time. So Raytheon, you know, the big deal with the US government, you know, Raytheon SAC coming from there. You know, Capita, again, local and central government important to them, but actually it was Capita who were, you know, giving that big burst in the European healthcare provider space that we saw earlier. Hewlett Packard, Enterprise, again, coming at BPS, you know, with an increased vigor, revamped what they're doing there, and that's an indication of some of their activity last year. And yeah, Capgemini, I guess, pre the iGate acquisition, you know, still highly dependent on the F&A BPS supply chain procurement type areas. So nothing much radically changed, except maybe, you know, Capita now much more sort of healthcare provider element in there, than there was previously. Right, so let's recap in terms of what were the figures like for the whole of 2015. So in terms of the announced BPS TCV, and I'll reiterate that this is a sampling exercise, so don't confuse it with the revenue numbers, and I've given indications of the revenue numbers that we saw through the first 3 quarters of the year earlier on. But the BPS TCV that was announced in 2015 was down 6% year on year. It was looking quite good until we got to Q4, which was a very low one in terms of the BPS TCV. So the yo-yo pattern that I was referring to earlier, so Q1 BPS TCV was up 12%, Q2 down 11%, Q3 up 108%, Q4 down 76%. Net impact down 6% year on year. Now, big difference between the 2 major geographies in terms of North America and Europe, in that North American activity was up 28%. Now, having said that, a lot of that was government sector driven. The numbers were down single figures in the commercial sector in North America last year. So I guess in recent years we've got used to Europe leading the way on this. US is now strongly reversing that position and leading the way over Europe. In terms of what sectors were showing TCV growth, then healthcare sector, boosted by healthcare provider and not just healthcare payer, was showing good TCV growth in both North America and Europe, and it is all healthcare provider in Europe in those figures, not typically payer numbers. Telecoms and media was also up in both North America and Europe, and the government sector in North America. We saw a fall off in the industry specific in the middle office BPS activity last year. We saw both the front office and the back office increasing in terms of BPS TCV. Within that back office, HR BPS was up, and noticeably the multi-process back office TCV increased in both North America and Europe. So there is a trend to adding other processes onto F&A, combining it with procurement, combining it with HR. The F&A is starting to move out into wider things. And in terms of 2 significant trends, then the healthcare provider market was showing both strong contract activity, but also showing quite a lot of restructuring and jostling for position activity. And clearly this is pre-Pero, but there's a whole chunk of stuff going on in that space. And in terms of automation, now clearly RPA and platforms are important. Certainly, in the industry-specific areas, and a large chunk of the more transaction processing-oriented elements of BPS. But again, clear examples of it actually, continuing apace in F&A BPS, and we can expect that to happen fairly widely within the market. So at that point, Paul, I'll hand back to yourself for Q&A.
Thanks, John. Yeah, we do have a handful of questions, so let me start straight away. Some of them quite similar, so I'll sort of bundle them together. A lot of people asking, do you expect the downward trend to continue, why are these markets shrinking? One interesting comment was, should I stay in this market? So I don't know whether you can just put some more flesh on the bones in terms of, the overall decline that you've pictured in the presentation.
Yeah, certainly. I'm going to go back to answer that one. There was a reason for me putting up this slide, if I can get back to it. Here we go. So, are these markets shrinking? No, they're not. The trouble with this sort of analysis is you're dependent on announced contract activity. As the market becomes more of a renewal one and actually more of an incremental change within an existing client, then, if you like, there's a structural change in the contract data in that, less of it is visible than it used to be. And that has some impact. Also, those massive contracts aren't there to the same extent. Okay, yes, there are some in cloud, in ITO, but really the massive contracts aren't there. It's become much more hitting individual pain points and so on, and less in terms of the massive contracts. But if we look at these figures, then, as an indication, taking the pure play BPS vendors as an indication of revenue growth in the BPS market overall, then, we're still looking at, if not 8%, certainly the sort of, in the 5 to 10% range. So, I think that's there. The CMS vendors, many of them are doing better than that 3%. Actually, the CMS, for a number of the vendors, the revenue growth was quite good. Again, some of the digital and, increased emphasis on customer experience and all those sorts of things are actually having an impact. I guess one difficulty is that probably not the case of staying in it is, are you in it or are you doing something different? Because an awful lot of the activity is now around renewals and working the existing client base rather than, being utterly dependent on new clients. And clearly that's true for most markets most of the time. I think there has been, when we look at these numbers at the end of the year, I think we will see a slight decline in the revenue growth. Now, things like the automation and the RPA have a twofold impact. One is we are looking at taking more cost out of existing contracts than has traditionally been achieved. So, we're going to see that productivity benefit, going up from where it was historically rather than down, which means you need to win, more business, from the client to actually stand still on it. Having said that, at the same time, if you're doing good things with automation and RPA and it is relatively incremental, then at the same time that makes it easier to win stuff elsewhere. And we've certainly seen things like the RPA being applied to retained organisation and so on. And where it's applied to the retained organisation, it's not always going to appear in these figures. Well, it should appear in these figures, but not in the contract figures. So, I think the markets are still relatively healthy. I mean, those figures, probably any of those figures, are respectable compared to many markets on the planet right now. I mean, it's not fantastic times in terms of massive global growth right now. So, it's going to be driven by, I guess, doing more in terms of scope for people rather than people's businesses necessarily massively expanding. But I think, I'm not sure, I probably ignored a few bits of your question, Paul, so remind me. But I mean, don't take these figures as there being no growth in these markets and these not being good markets. They're still pretty good places to be. You probably just need to work a little bit harder to get those extra few percentages of revenue growth at the moment than previously.
Great, thanks, John. Do you have a feel for what's happening with margins in BPS? I guess that depends on service line and a whole host of other factors, but anything generally you can talk about on margins?
I'd need to look it up. I mean, we do in the one quarterly. We're monitoring the EBIT margins in the same way that we're measuring the revenue growth here. I'll try and answer off the top of my head, but I can't remember the figures. I need to go and look them up. I think the margins are holding up reasonably well. There might be a slight tail off on them, but I don't think it's particularly significant. I should probably go away and look that up. But I mean, most of the suppliers are being pretty good at holding on to margin. Even necessarily at the expense of some of the revenue growth. I think those figures I think the margin figures are okay. I mean, they're, if you take the standard industry-specific back office BPS, we're still looking at very significant double-figure margins.
Great, thanks, John. Actually, this next question is just a point of clarification. Can you repeat the percentage decline of commercial business, commercial BPS in 2015? Maybe there's a slide. If we can send on the slide deck, that would probably answer that question.
Yeah. Okay. Let me go find it. Did I put it in the conclusions, or was it further down? Let me look that one up for you.
Yeah, no worries. It's.
No, I mean, I'll look it up now because I've got it written down here. I just need to be able to find it. Okay, so the figures for the commercial sector in terms of BPS TCV, it was down 17% globally. North America down 9%, Europe down 27%.
Great, thanks. Another question here, and maybe the last one, just looking at the time. Why aren't more countries, particularly European governments, for example, procuring BPS, considering the significant budget shortfalls that they are struggling to manage?
I don't know. I guess the usual political factors that have always been there. I guess some countries feel it's pretty important not to be seen to outsource government services. It's always tended to be that the Anglo-Saxon countries that do it. So, the US, UK, Australia, the French and the Germans have generally been pretty reticent. And it's a cultural thing rather than an economic argument thing. And you might be better off asking Dominique that one.
Okay, thanks, John. That's great. I'm not sure if we've got time for just one more. I think that's probably it. So I will close, and we'll try to get back to you on any questions unanswered. So let me just finally say that it's great to have you with us today, but do remember that the BPS Index webcast, while it highlights certain developments in contract activity, it's just a small fraction of our analyses that we constantly do throughout the year. So if you want to find out more about any aspect of NelsonHall's services, then please do get in touch at the email addresses on the final slide. thanks for being with us today. Please join us again for the next BPS Index webcast, which will be in April, and have a good day. Thanks very much.